Welcome to the Global Tech Leaders Podcast, where we help business leaders and individual contributors with actionable insights to hit their number and figure out the nuances of truly operating a business globally today, squeezing the essence of the lessons learned from the planet's top tech leaders. This is your guide to joining the fast track to global market scaling.
Today, we are joined by Gene Zolotarev, who is the CEO of Baltic Tech Ventures, who are doing some incredible, innovative approaches to investment in this space in the Baltic region. So he's had an illustrious career at a very much at a C level, and I'm very keen to understand his motivations, what brought him to where he is, what's different about private equity and venture capital, what's specific about it in the Baltic region. So welcome to today's show, Gene.
Thank you, Ross. Happy to be here.
Great. Well, let's get stuck in straight away. Tell us about you personally in your own career, and kind of what's brought you to where you are, and why you're so passionate about what you're doing right now. If you could share.
Sure. Well, my career wasn't exactly a straight line, and I'm American from New York. That's where I grew up, and I was very much interested in technology, early programming, computers when they were just starting to come out there, like in the late 70s, early 80s. And basically what I just wanted to be a scientist and an engineer and a physicist or something like that. And that's what I've studied at the university. I went to Columbia. I've studied engineering and applied physics, and took a lot of course, and basically had a minor in astrophysics at the end of the day.
Wow.
But as I've studied more and more, I realized that I was also interested in business and finance and a lot of other things. So after graduation, I worked for a consulting firm, and that gave me a lot of different exposures to various different industries. And I really felt that finance and investment banking was really something that was both very interesting and very well paid, which was a very important criteria for a young man in New York. And that's what eventually I kind of fell into. So I worked for over 20 years, in senior management positions in commercial banks and investment banks, and I've built up asset management companies and brokerage firms and things of that nature, mostly out of Central and Eastern Europe and Russia and CIS, because I speak fluent Russian, and that proved to be very helpful.
Sure.
But my love for technology was always there. So when I left the corporate world about 15 years ago, I started to co-invest with a lot of my friends out of like US, Israel, UK, and learned a lot about this industry. And when the time was right, a couple of years ago, I decided that, why don't I just do this myself? I was very familiar with the Baltics. It's a great region, and what's been happening over the last, decade, but more importantly, over the last, say, 3 or 4 years, Baltics have really became kind of a venture capital startup like hub, almost like hotspot.
Mm-hmm.
I mean, the whole industry has been taking off, but in Baltics, it got a lot of government support. So I found myself, in kind of the right place at the right time again, and I thought like that this is just a great place to build a venture capital business and accelerator and help identify and grow promising, scalable companies. And that's kind of in a nutshell of why I'm doing what I'm doing. So I am super passionate about the Baltics as a startup ecosystem. I think it's great. It's the best value for money anywhere in Europe, if not the world. It's got a fantastic concentration of talent, ambition, and increasingly funding. So kind of a trifecta of those kind of powerful vectors and forces. It's what's driving the development. So
I think there's a couple of points you've touched on there that are very relevant to some of the things that I've seen as criteria for success. You mentioned that you come from an engineering background, which you were very interested in business. So I'm a computer scientist myself by training, and then I rounded that off with a postgraduate master's in international business and marketing. And I think that kind of approach to a startup is key, because engineers are problem solvers by design. They love problems. They solve problems to create more problems, is the way I kind of think of it. And then you have a commercial lean to it as well, that you can kind of engineer into that, as it were, which will allow you to reach the reality and get feedback from the market as to what your product can do. And I think there's also a secondary platform layer around success in the environment that you're a part of. So I suppose, having grown up in Ireland myself, I've seen that too. We had a situation in the 1980s where we had a highly educated workforce, but we'd no jobs for them. They'd nowhere to go to exercise this talent. And I think that that was very detrimental. We saw a massive brain drain, we called it, in the 80s in particular, and into the 90s, until things shifted, where the government created very business-friendly policies, and we had all this inward investment, and we had this boom right in the 90s. And I think that's starting to happen in the Baltic region that you mentioned there, and I'm keen to dive right into that. So, I can tell you from my own perspective what that's looked like in Ireland, and we've talked about it on shows before. But maybe let's just hone in on the Baltic region for a minute, if we could, and just tell us what has changed. What's been so dramatic that have led to companies popping up all over the place? You mentioned about investment, but investment only comes when you have the right criteria to meet that investment. That's my belief. So maybe just tell us what has changed, geopolitically in that region over the last, say, decade for you.
I mean, like I said, this evolution of the ecosystem, let's call it the ecosystem of development, had obviously there are many moving parts, but some of it was that you had a lot of sort of highly ambitious, knowledgeable people working in various industries, which were the priorities have been shifting. Historically, the Baltic countries were very big in transit and trade with Russia and the CIS. So you had a lot of people dealing with that. A lot of people were employed in financial services that was financing that trade. With political relations, geopolitical relations becoming a little bit more icy, and the Baltics being kind of solidly in the EU and NATO corner, I mean, naturally, it created a vacuum where talented, ambitious, enterprising people had to go, and technology was one of them. And it proved to be that not government also recognized that this sector really needed support. So there are like lots of very attractive support packages from the state in all three countries, and some of it I think was just luck. First it was Estonia that kind of put the Baltics on the map for technology startups with Skype and a bunch of other success stories, and that led to just like one thing leading another, that all of a sudden the world has heard of these like tiny little countries that were punching above their weight, and that led to more interest, and that led to more people taking a chance on funding them and setting up shop. So I think it just naturally kind of developed as a result of that. So luck did play a role in it. So I think if there was like no Skype, for example, I think that development may have taken a few more years. It probably would have happened anyway, but Skype was the one that really put like the Baltics on the map.
Right, you've got pipe drive there as well, from what I understand.
Yeah, but that came much later. That came much later. This Skype was really, it kind of like got that reputation of what are these Baltic countries up to? What are they doing? I mean,
Sure. No, I suppose if you build it, they will come, like the Field of Dreams movie, right? And I suppose from an Irish perspective, that would have been Intel, would have been Pfizer as well before that again. And then when Microsoft came in the 90s, and then Google came, and then Sheryl Sandberg moved from Google to Facebook, Facebook came, and then it becomes a kind of a domino effect, right? Where do you, I think what's different about the Baltics is that you guys have innovation, that we have innovation here, but it's happening within the ecosystem of the companies that are already here, right? So it's the big noises that are here, whereas you have this kind of innovation hub. Maybe just talk to us about, what sort of talent do you have? I mean, what are the universities turning out in terms of like developers, and what do some of those, and I'm very keen to get to Baltic Tech Ventures as well in terms of accelerators and so on as well, but what does the kind of talent landscape look like?
I think to be objective, I don't think this is like the talent hub of the world or anything. There are much more prominent universities and tech hubs elsewhere, but I think there is a historical perspective, like in the Baltics during the Soviet time was where it was the leading position, especially Latvia, for electronics and for pharmaceuticals. So that kind of knowledge base and that kind of legacy really helped for a lot of the earlier startups, but I think it's just an average, like a combination of different forces. I think it was it was a fairly good concentration of talent, and let's not forget, inexpensive. It's like I've mentioned the words like value for money. You get a lot more value for money in the Baltics. Salaries are much, it's like a fraction of what they are in Western Europe. That means that runways are longer, companies have more breathing room to succeed. It's easier maybe to get funding because you're not moving like millions or billions around. I mean, we're talking about our average fundraise for our portfolio companies is like 300,000 or 500,000, like that. That's like seed level fundraise. I mean,
sure,
that's like 10 times less than something similar would take place in the UK or Switzerland, whatever,
Yep.
Israel. So like I said, and because of that, I think there's an excellent risk reward. You've got the same scalable tech, similar principles of graduating through accelerators and having it vetted and tested. But we're talking about like an average valuation of 1 to 3 million for a post-revenue company. That's what we're in that, like that's what's in our portfolio. That's a fraction of what it would be in kind of a developed hub. These are post-revenue companies, right? You wouldn't be anywhere near that, if it was anywhere else in the US or Western Europe. Okay. So so it's not like some special secret sauce. It's a combination of factors that's leading for just good value.
Okay, and how do they find internationalizing from there? I mean, what's the kind of methodology to get into North America? How does that kind of happen organically when it starts out in the Baltics?
Well, it's once the company reaches that scale, it's every man for himself. It's a hustle.
Okay.
And some succeed, others don't. There's no methodology. Methodology is you work as hard as you can and you hope for the best.
Yes, yes, indeed. Yeah, very, very true. Well, look, tell us about Baltic Tech Ventures, what you guys are doing, why you're different, and what's so exciting about the projects you're involved in, if you could share.
Well, in a nutshell, like once again, I don't think we have like a monopoly on exciting projects. We have, and I don't think we're any better at picking winners than anybody else. What's different about BTV is that we have a fundamentally different business model and a fundamentally different way how we align ourselves with investors. Because we are a publicly listed company and we're not a fund. And I think that's a very important distinction. A fund, a typical VC fund, they take investors' money, they invest them in startups, and they charge a management fee and a success fee. We are not collecting investors' money. Investors can participate in one of two ways. They can either buy our shares or participate in like secondary public offering. We've just recently closed one, very successful. We had investors out of US, UK, Israel, Monaco, Latvia, Lithuania, Estonia, obviously, and yeah, I think that's it. And Italy, yeah. So so that's one way to kind of get involved if you don't want to actually get involved in any particular company, or they can co-invest with us on any one of our investment projects. We don't charge any fees for that, and they get to invest on the same terms as we do. So that's the two ways investors get involved. That's very different from a typical VC fund that very jealously guard access to their investments. So for us, because anybody can buy our shares, there is no minimum, no lockup, and no fees. You become a shareholder like anybody else, and as a shareholder, you have full economic benefit of the underlying portfolio. Now, we get paid, like the operations are being paid for by the startups themselves, either in cash or in equity, as we help them reach different KPIs. So we're not all about the investment, we're about business development. So it's kind of a hybrid business model where we make certain small minority investments to get in, and then we help the company develop. And for that, we get, once we reach certain milestones and KPIs, we get equity. And all of that accumulates to a minority stake. Still, we don't want anything more than 10%. And we will aim to get out of our positions within 2 to 3 years at round B or C. Okay. So because of that leads us to recycle capital every 2 to 3 years. We're looking also not for unicorns. I mean, we're not looking for like some mega disruptors. We're very happy to develop companies that will become strong regional leaders. And just to get in at the valuation, I've already mentioned our target valuation is anywhere from 1 to 3 million, and we will aim to exit at a valuation of say 8 to 12 million. So these are not. This is still 5x or on the average, but it's not like billions and billions where you sit for a long time and you wait for a company to possibly become a unicorn. That's not what we do. What it leads is, but the degree of certainty of happening, something that an event happening in our case is extremely high, because it's much easier to move the valuation needle from 1 to 10 than from 10 to 100, broadly speaking.
Sure.
And that's what we do. That's the difference. The difference, we're publicly listed. We're the only company like that in Central and Eastern Europe and the Nordics. There's one other company who does similar things to what we're doing listed in London on AIM, but there's nobody else. So that kind of leaves us a bit unique, and I think that's very exciting because more and more people want to get into VC, and historically it's been very prohibitive. And we are the ones who are offering an alternative solution.
I think there's no question that's unique. I absolutely recognize that. I'm curious to know, like, how does that shift the conversation when either you approach a potential investment or they approach you? What does that change in the conversation with those companies that could be in your portfolio?
Well, yeah, generally speaking, it's a positive. Those who can grasp the concept, and not everyone can, because they tend to be, younger people with less financial experience or market experience. But the vast majority understand the benefits of that, and I think they understand that what we're offering is a much broader footprint, because we're public. A lot more people will know about them than otherwise would have learned about that company. Also, once we onboard the company, it automatically they get plugged into our social media marketing platform. So we make sure that we do all these investor pitches, and the companies can pitch through our platform, and that's like thousands and thousands of potential investors. So, and because we don't charge any fees for co-investing, that creates a very kind of a powerful financial incentive for everyone to be involved. Like we don't charge any investors who want to co-invest with us in a specific company. They do it on exactly the same terms.
Got it. Okay. And I suppose, like, when you are investigating a potential investment, like what is it you're looking for? I know you talked about valuations of 1 to 3 million with a 10% or lower stake. They're the financials, but what do you look for in a good founder, co-founder? Talk to me about some of their values, some of their drive. What are kind of check boxes for success, or red flags for that matter?
Well, it's like, once again, I don't think we're any different. The only difference is personal experience. As I've had 20 plus years of investment banking, that's hundreds and hundreds of deals.
Yeah.
Of all kinds, M&A, ECM, DCM, whatever, all kinds of all kinds of deals. So when you do, enough of it, you develop certain insights into the personal qualities of a person who may or may not be behind the deal to help it succeed. And I would say, maybe at the risk of sounding too categorical, over the course of that, several decades of experience, I'd say most of the founders or people at the helm of companies, they tend to fall into one of two categories: those who get things done and those who try to get things done. And we go for the former. I mean, people who get things done. They don't come up with excuses. They don't blame failures on the environment or on circumstance. They take full accountability for their wins and for their losses. And that's the kind of personality I think it takes to make it succeed. And so if I see that's like a huge, like big fat check, checkbox.
Okay, and what do you think? Is there a personality trait that you see let people down? Like in terms of those people who get them done and don't get them done, how do you discern? I suppose you're probably listening for key cues in the conversation. Maybe if you could share some of your success stories about somebody that you spoke with that just thought this guy's a rock star from day one.
Well, I mean, okay, a lot of them are intelligent. Obviously, you have to be intelligent and they have to be driven and passionate. I mean, these are the obvious things that everyone will tell you. And I'm not like a trained psychologist or anything, nor am I an NLP expert. A lot of it is just talking about, how they see the future, what do they want to do with their, with this investment, what do they want to do next. And that kind of gives you an idea for who they really are and whether or not how committed they are to a particular venture. Commitment is is a huge thing, and like I said, a lot of it is just intangibles. I wish I could share them or put them in a book or something. A lot of it is just intangibles, and also they don't have to be likable. I think one common mistake investors make is that they give money to people they like, which is not necessarily criteria. Some of these people can be abrasive, or they can be downright hostile or belligerent, and but these, I mean, okay, it's nice, of course, to work with people you like, but that's not the criteria that we're looking for. So. You see a lot of, also, a lot of like very successful cases where not everyone adored these visionaries of Steve Jobs. You have like a lot of other people who build amazing businesses. They're not necessarily terribly likable people.
Interesting.
Yeah.
Very, very good point. And I suppose that brings up a question for me around, how do you shift? Because I've seen this done very well, and I've seen this done very poorly in organizations where a founder tries to transition to being a CEO and it doesn't work, or it does work. And it does work because they're open, they're honest, they listen, they take advice from others. How do you guys manage the shift between a founder who's maybe an ideas man and maybe isn't going to be in the CEO seat, or has said, no, I want to be in the CEO seat, but it's going to take some work and I recognize that? How do you guys manage through that scenario?
We rarely come across, because we invest in such an early stage. Very often it's still the same person. This is not, I would say, the situation we often encounter. However, I think I guess I'll follow up the scenario that works best if there were two founders or two people leading a company, and they need to have complementary traits. One should be more kind of analytical and scientific, and the other one should be more kind of sales oriented and business savvy. That combination tends to work well.
Okay. And what sort of at that early stage where they're not maybe transitioning into that seat, what type of training do you kind of insist they go on? What type of kind of adaptations do they need to make to get that kind of 5x valuation? Like, what would you insist they sit down and do? I noticed on your board and your team, you have extensive list of profiles with expertise. Maybe what does that journey look like for a portfolio company as they take on an investment?
Well, we don't obviously demand anything. We have a minority stake. We are in no position to make demands. Sure. But we do recommend certain things, and we also, we're not there to, we don't run like a summer camp for startups. I mean, we give certain recommendations. We help them with introductions and for both clients and partners. We help them structure their product profile in a way that it's most appealing. And we help introduce them to people that make a difference in their particular industry, and to give them more credibility, to give them more reach and footprint. But we're not their psychologist or a therapist, to help them grow.
Of course.
To help them grow as a person. That's how we do. Yeah, obviously, they can ask us for advice, and we're happy to give it. But we're not there to. We're there to move the company forward, to get them to round B. That's what we're trying to do.
Okay, got it. Makes sense. I've noticed throughout the course of this conversation, you've been very humble, which is a fantastic trait to have. But I dare say, with your background in education and experience, you quite frankly are an expert. So maybe just tell us a bit about your own kind of superpower, as it were, your own value and leadership traits that you find are very important, that have led you to where you are today, through some of your experience that you've clearly been very successful at.
I don't know. I would struggle to answer that. I don't really think I have any superpowers, nor do I think I'm terribly successful or humble, by the way.
Oh, okay. Start boasting then. I'm waiting to hear it.
No, but there's nothing to say. My background is a matter of public record. Anybody, they could look at my LinkedIn profile, and I don't really consider myself an expert on anything. I think I probably know more than the average person, but I don't think I have some deep, profound expertise in any of these fields. And there are lots of people who are probably more in depth and smarter and better educated than I am. No, I think it's just a combination of things. And I'm a practical person. I look at things from a very practical perspective. And things that work best are the ones that provide immediate tangible benefit. And that doesn't mean that I don't want to, find the next startup that's going to change the face of humanity. But I'm not trying to find one. Maybe if I find it, great. But that's not what I'm, that I really want to do. Also, that's not what I think makes money. It's if you're going to, you have to have your objectives in a very clear way. We're in the business of multiplying returns and producing a very healthy return on investable capital. What is often confusing in this venture capital industry and technology is that you hear it's people wanting to do this or that and engage and using all kinds of trendy terminology, and it's as if they're ashamed to say that they really want to make money and get rich. And
interesting.
Yeah, so I think you have to kind of own up to what you really want to do. We recently had, I had an exchange with one very promising startup, and they keep insisting that they're not doing it for the money. And I told them, I say, if you're not doing it for the money, you're not gonna succeed. If you're doing this to make the world a better place, and their product is definitely not humanitarian in nature, but
Right.
then you should just say it, I'm making a product that's making the world a better place, and it's not going to make any money. Therefore, if you're looking for investment, don't expect anything back. You'll make the world a better place, but don't expect to make money doing it. So I think this clarity of purpose is very important. So that's what it is. So you wanted me to comment on my superpowers, so I guess it's practicality and clear thinking. That's it.
There's no question that's the best answer I've heard to that question, because you've uncovered something there that's like the big elephant in the room of profit being a dirty word sometimes. And I think the marketplace is the ultimate judge, jury, and executioner of your idea. The market is there to provide feedback. You either win or you learn. And if you're there to play, you should be there to play to win. And, the market's there to give you feedback along the way. And the feedback is, well, are people buying your product? Now, you can argue about profitability around market share and land grabbing and, massive levels of running a burn rate and a deficit and all those kinds of things. But ultimately, the goal is to make a profit and make money. You can draw that out. And that's very much the American kind of way of doing it. And that's fine. It's about market share. But yeah, right, as you rightly said, you're there to exit and you're there to make money. And that's where the market will give you, it'll be your school, right? It's your school of learning. And that's my philosophy anyway. I think you've clarified something that is probably in people's minds, but ultimately, if you're there to make the world a better place, that's part of the journey. You should be there to do that mutually. Now, healthcare is a different thing, and we can go into a philosophical debate, but no, I think that's very, very clarifying. And thank you. Huge insight. Well, look, I want to really thank you for today's contribution.
My pleasure.
Beneficial. I hope you've enjoyed it as much as I certainly have. I would love to do a second part 2 of this show into the future to see how the Baltic region develops. If you're open to that, Gene.
Sure. Love to. Thank you.
Wonderful. Well, look, thanks again for joining us on the show today, and I look forward to that second edition.
Great. Thanks, Ross.
You've been listening to the Global Tech Leaders Podcast, designed for both established and aspiring career-focused tech rock stars, as well as helping leadership figure out how to speak global in today's multicultural world. For further details, check out sf-talent.com.